Hey everybody, I hope everyone's level 2 studies are going well. And in this video, I want to talk about and give examples on measuring pullback depth and second leg size. And I also want to talk about some points from the seminar that I recommend. And I'll also briefly show part of my spreadsheet. What I want to share in this video is how to use two time frames to accurately measure pullback depth and second legs. So the first example here, I believe it's December 18th, 2025. We can start with a more basic example. Let's take a look at bar 55 on the 5-minute chart only. Bar 55 is a bear breakout bar, and there's different ways you can measure this, and the way that you measure it is subject to change, but ultimately it's up to you how you measure your signals and your breakouts. So I'm going to demonstrate two ways to do it here. Bar 55, one way you can measure bar 55 is from the 1R from the pivot to the close of the signal. So there's your breakout. The pullback is from the close of bar 55 to the high of the pullback, the high of bar 57. And then you can see the market came very close to a leg 1 equals leg 2, measured move down, and then there's a reaction at that support. Not to mention support from the bars to the left as well. So that's one way to measure bar 55. Another way is to take the breakout bar itself, the high of the bar to the close, pullback to the highest point of the pullback, and then second leg you can see a reaction on bar 60. The market, there's the breakout 55, deep pullback, second leg down with a minor reversal. Looks like some profit taking there. The point of showing this example is that we do not need to go to a lower time frame chart to see that after bar 55 closed, the market rallied, so there's a pullback and then a second leg down. It doesn't matter which way you do it, as long as the way that you do it works for you and you're consistent. The point with this example is that, again, we did not need a lower time frame. We can see breakout, pullback, second leg. So what's the second time frame for? Why do I have the 1-minute chart pulled up? Because earlier in the day, there's an example of a breakout where we're not totally sure how the bar behaved. Look at bar 4. We don't know, so we see a signal on bar 3, bear breakout bar on bar 3. We don't know if bar 4 sold off to the low, then rallied to its high, then sold off and closed here. Or if it rallied to its high, sold off to the low, and then rallied into the close. In other words, we don't know if the bar went down, or up, down, up. And when you do this enough, you begin to see the pattern, and you can infer that bar 4 rallied to its high, then sold off to its low, and then closed here. But a lot of the time, like this one's a good example, you cannot tell just by looking at the 5-minute chart. That's why it's useful to pull up a lower time frame chart and compare the two. So here are the first 3 bars of the day. Bars 1, 2, and 3 here on the 5-minute, and this is bars 1 through 3 on the 1-minute chart. So every 5 bars represents one 5-minute bar. So now we can see a lower time frame. How did bar 4 actually behave? It began to rally, then sold off, then rallied again to its high, then sold off to its low and closed here. So in other words, to summarize how the bar behaved, bar 3, it rallied to its high, then sold off to its low, then closed here. Market went up, then down, then up. Why is that important? Because that tells us that bar 3, if we measure the breakout bar itself, had a pullback and a second leg bigger than 1R. But if the bar had sold off first, then rallied to its high, and then closed here, your second leg measurement would be different, and it may not quite have reached 1R. So in this case, it did rally first, then sell off, but some of the time the bar will sell off, then rally, and that's why the lower time frame chart is useful. There's another example that I want to talk about right here. This is bar 6 on the prior day. Sorry, it's actually the same day. Okay, so this is the same day at 10 o'clock. Here's what happened. Bar 6 rallied, so bar 6 sold off, then rallied into the close. The market pulled back on bar 7, rallied into the close of bar 7, then rallied to the high of bar 8, and then sold off. So bar 6 rallied, there's a pullback to the low of bar 7, rally to the high of bar 8. We do not need the lower time frame chart to show us that bar 6 breakout signal pulled back and got a second leg around 0.8R, because we can see on the 5-minute chart with the tails on the bars, we can infer that from the close of bar 6, the market pulled back to the low of 7, rallied, and then rallied to the high of bar 8. For the sake of completion, I'll show it on the lower time frame. Here's bar 6. These 5 bars, I believe, are bar 6. Market pulled back. That's bar 7. Rallied to the high of bar 8, and then sold off and closed near its low on bar 8. There's another example like this one on the prior day. Breakout follow through, bars 57, 58. We do not have to go to a lower time frame to see that bar 59 rallied to its high, sold off into the close, and then 60 sold off to the low before reversing back up. So 57, 58, breakout follow through, market pulled back, got a second leg, and then reversed. I want to find one more example of a bar that you're not totally sure, and that's why using the lower time frame can be helpful. December 12th, bar 52 is a good example. It's just a reversal bar, but this applies for breakout bars too. So it's bars 52 and 53 I want to talk about. And what I'm going to infer, what I believe happened is that bar 52 closed, the next bar opened, sold off to its low, then rallied to its high before selling off to its close. So I believe it went down, up, down. But I cannot prove that. I'm making an educated guess based on typical market behavior and the breakout and second leg pattern that we see repeated. But you can see the bar closed just about on its midpoint. So again, I cannot prove that this bar 53, did not rally to its high, then sell off to its low, and then close at its midpoint. So we're going to use the lower time frame to see how the bar actually behaved. This turns out to be a good example because the market did not do what I thought it did. So bar 52, 1350, closed here. So these 5 bars make up bar 52, bull reversal bar, doji bar, bear breakout, and then bull reversal. The next 5 bars make up bar 53. I thought the bar created its low in the first minute or two, then rallied to its high, then sold off. But actually, the bar created its high, then sold off to its low, and closed here. And that's why double checking on the lower time frame chart is important. It's better not to just assume that it pulled back, then rallied, because it changes the outcome and the accuracy. It'd be inaccurate to infer that bar 52 truly exceeded its measured move target. In reality, it did not reach a 1R measured move. And we can prove that on the 1-minute chart. In this case, it actually looks like it did in the very first 2 minutes of the bar. Shallow pullback reached its measured move target to the tick. But it's impossible to know that it pulled back and then rallied to its high just by looking at the 5-minute chart. So for me, that's why I've been filling out these columns together. I initially did pullback depth by itself, and then I did second leg size, but then I went back, and I think this is worth sharing too. When I go back to double check, I always double check each column. And when I double checked pullback depth, and especially second leg size, I noticed that I was getting numbers that I wasn't even sure how I got them. Like the data that I was inputting into cells, it just seemed like I have no idea where this came from. How did I get this measurement? Like they were just so incorrect that it was kind of stunning. And it's really a good sign. There's no better sign than discovering something like that in your level 2 study, because then you know, okay, now I'm fixing this. This was all incorrect. I have a better understanding of how to measure pullbacks and second legs now, and this is all much more accurate. So it's actually relieving to see that I had to change a bunch of the data entries. So with that said, yeah, maybe I wanted to talk about something from the seminar in this video too, and this is a good example, looking at my level 2 spreadsheet here. So I have over 600 signals in this spreadsheet, and what I discovered is there's a signal that I didn't even track, and that's 1-bar reversals. So this isn't even a complete study for the month of December 2025, and I believe I have 625 signals, and there's more to go. But my goal right now with this study is to do I call it a bare bones study. It's not, I'm exaggerating when I say that. Obviously, there's a lot of samples here, and obviously, if you can't tell, I'm hiding a lot of cells up here too. Like this doesn't take context into consideration, day type, leg count, anything like that. So this is just the bare minimums here. So this is not the complete study, but the point is, the goal with my study right now is to be able to at least extract an understanding of market behavior and general probabilities to align my trading with, so that when I'm taking signals, I have a calibrated expectation. When I have a signal, I know how to manage the trade when I take it. I know whether a signal is a take or a fade or a wait. these are all things that I can get from this study before going back and gathering all the 1-bar reversals. I don't need to do that right now. One of the last things you want to do with a level 2 is let it stop you from trading for too long. And that's up for debate, I think. Maybe it's up to the individual, but speaking for myself, I've taken a step back from trading to really work on this level 2 study, and I'm getting really antsy to the point where I'll watch the market for about an hour or two a day, but I've really put my head down to complete this study so that I can have a proper level 2 study, do a proper level 3 back test with filters, and then apply what I find to my live trading. So I have to have the discipline to not I have to have the discipline to finish my studies before applying my findings to the market. That's the way I want to do it. But I don't want to drag out my level 2 study forever. It's something that I'm going to be working on far longer than, or much longer after I start trading again. I plan on trading by the end of the month, if not certainly by the start of March, I'll be trading again. But I've definitely taken a step back and a break from trading to work on this, to find what I need to find. And another thing I want to mention about my level 2 study is that I do not know how to export data from a trading platform like TradeStation and directly upload it to an Excel spreadsheet. So everything that you see here was done one by one, manually, by hand, by me. And that's a lot of work. And that obviously is a lot of hours of painstaking work. It's really repetitive. It can get boring at times. And I truly think that's a barrier to entry. Also, back to my other point, every cell that has, except for the date, every cell that has one of those red triangles is a note for me to return to. And things that are highlighted are things I'm not sure about. So as you can see, there's just so much that is really not complete with this study. But I figure there's enough that is not highlighted. There's enough that are not notes about possible confusion or clarification that I can take what I learned from the study and apply it to my trading. But again, yeah, this is a barrier to entry for sure. I don't believe it's possible to truly understand market behavior and really develop a trading system that works for you without doing this step, without doing a market behavior study, as I refer to it as a level 2 study. I just don't think it's possible to do it from passive learning alone. And I say that speaking from experience. I was always willing to do the work. I just did not know what the correct work to do was. And so what I thought was, if I just read the books, just read Al Brooks' price action books, read them over and over, and watch the video course videos over and over and over, then I'll learn how to read charts, I'll learn how to trade, I can apply what I learned passively to my trading. And I found that that was not true. It's not possible, at least for me. It wasn't possible to do that. I had to do the work basically myself. So Al Brooks will guide you. I can guide you, but the guidance only takes you so far, and then you have to pick up where we leave off. You have to do your own level 2 market behavior study. I'm going to continue to document this process and share the results from my back testing, but it's still, there's so many problems with that. Like, it's not possible for you to take that and trade with it because you didn't do the work. So you don't know exactly what I mean by each and every column. What's the definition of a signal? What do I mean by a rev, breakout follow through, 1 bar, reversal follow through? What do each of those mean? I have an image for each one, and you may not have the image. You may have confusion. you may have a different image. What do I mean by 1R? How do I measure pullback depth? How do I measure the second leg size? How do I count legs? There's so many factors that this is way too personalized for me. So I'm trying to demonstrate how it's done, but you have to go and do it yourself. So again, this is a barrier to entry in day trading, or I guess this can be applied to any trading, to collect the data. And it's the technical aspect of the work. It's, like I said, it can be boring, it can be repetitive, but it's, I think, necessary to get to the next step and to take your trading to the next level. So with all of that said, I want to share how I relate this to the seminar that I recommend. And I'll cut the video here. I'm going to have to pull out the whiteboard and I'll make a drawing and I'll pick it up from there. Okay, so this concept is talked about in the You Were Born Rich seminar, where John Canary is talking about the common denominator in success in any business. And by the way, if you're not familiar with the seminar, if you're not familiar with the stick figure concept that I'm showing here, I highly recommend you check it out, or this will probably be confusing. Although it can still be helpful, but you'll get it a lot more if you study the seminar too. And this is all kind of related. If you're kind of a person that hears advice, but you're not too sure about doing it, not acting on it, I highly recommend if you can just find 5 minutes a day to watch the seminar. I promise it will take you from where you are in any area of your life, trading included, and take you far beyond where you are if you will apply the lessons. Also, this entire lesson that I'm showing right here it's really brief. I think it's toward the end. It's probably part 5 or part 6 of the seminar. It's in the part called The Razor's Edge, and they're talking about the difference between winning and losing. And this entire lesson right here can be summed up in about a minute and a half in the seminar. So that's why I'm saying if you can find 5 minutes to watch the seminar each day, building that habit will really change your life. And that goes for the level 2 study too. We'll get to that in a few moments. But as far as this lesson goes, the common denominator, I'm going to see if I can draw as I do this. Let me just, missing a bit here. Person A exists and they reach their goals. Person B exists, they don't reach their goals, but they're both doing things. And the question is, what is the difference between person A over here and person B? What is the basic difference between those who are successful and those who are not? The common denominator of success is that the successful individual forms the habit of doing things that failures do not like to do. So if you think about that as it can be applied to trading, the person who finds success in trading, I'm convinced they have to do their own market behavior study. They have to study the market themselves. They have to do research themselves. And it's a hard thing to learn to do. It's a hard thing to implement if you've never done it. And this is relatable across all fields. You think about I like to use nutrition as a habit or as an example of a habit. People who are in the habit of eating unhealthy foods, maybe highly processed junk foods, these people are what you would call influenced by pleasing methods, which basically means pleasing processes or instant gratification or easy now, hard later. Whereas the success type individual is influenced by results only. They care about the result. They don't care if the process is hard or difficult or anything. They're focused on the result. They're result oriented. This person is motivated by pleasing methods. They're in the comfort zone. They're not, by definition, if you're influenced by comfortable, pleasing methods, you're not leaving your comfort zone. You're not growing. If you're influenced by pleasing results, you'll do whatever it takes to get those pleasing results. So, with that said, I think another kind of fun example, I've mentioned this before, is that at the end of my shower, when I take a shower, I turn the water to as cold as it goes, and I'll take 5 breaths in the cold water. And it's an example of doing things that people don't want to do. I guess it's more psychological for me than physical. I don't really know what the physical benefits are, and I don't do it for the physical benefits. I know there are physical benefits, but I do it to challenge myself. And I've noticed, as I've been doing it consistently for probably over a year now, that there used to be this little voice in my mind. It actually wasn't a little voice. It was a very big voice when I would turn the water cold, and my body would tense up, and my voice in my mind would be screaming at me to turn the water off or get out of there. What are you doing? It's going to convince you it's painful or it doesn't feel right or whatever. And with practice and with consistency, that voice has gone away to the point where my attitude has shifted from the water feels cold to the water just feels like what it feels like. And then I relate that back to trading and with my level 2 study. And I think when I came into it, the first time I ever learned about a level 2 study, it was overwhelming, confusing, extremely difficult. And as I look back at it now, it is what it is. It's as difficult as you make it. It's as rewarding as you make it. I do believe you get what you put in. That's why I have this huge market behavior study, and that's why I'm consistent with it. And I've shared that before. I don't get an hour in every day. I try to get at least a couple hours in every day, and I've been averaging about an hour a day for close to a month now, and you'd be surprised how quickly that adds up. So I encourage anybody watching this, if you haven't started yet, even just set a goal to do 5 minutes a day or 15 minutes a day of your level 2 study. And just by showing up consistently every day, eventually you'll start to get the hang of it. You'll start to learn. You'll start to stay for 20 minutes, then 30 minutes, then you'll see you can do an hour. And that's just kind of how it works. That's how you grow. So I think I've covered everything that I wanted to talk about in this video. So we've talked about how to use 2 charts to track pullback depth and second legs. I shared a little bit of my level 2 and the background of it. And then of course this lesson from the seminar. So that'll be it for this video. Thanks for sticking around until the end. I really hope that the information was helpful, and that'll be it. So thanks for watching, and I'll talk to everybody soon.